Do you think the only way to profit in real estate is to get buried under tenant calls and paperwork? Well, I'm here to tell you there is a better strategy. And it doesn't mean you're going from single-family homes to commercial, because that sounds like a hard jump and something difficult to do. But many of my clients and other successful investors have been using a strategy that allows them to bypass the whole residential real estate step and have access to high-value investment deals in commercial real estate. So actively managing single-family homes will definitely feel like a full-time job, but there's a way for you to get into commercial real estate and shift your role from hands-on landlord to being an intelligent investor. That's right. With the right partner, commercial real estate offers a path of truly passive income without dealing with late-night repair calls, managing tenant relationships, upkeep, and the legal complexities that come with that. You can free up your time and enhance your portfolio's performance without the day-to-day stress. So the reality is most people get involved with single-family homes because they see the price point. You're buying a $400,000 investment property, you're going to put down 80 to 100 grand. That seems like a bite-size potential for people, and it allows them to get involved. But what if you could do that and make that passive from the very beginning and be involved in a much larger asset? I'm going to give you this example. If you've got a duplex that you bought for $500,000 and one tenant moves out, what vacancy rate do you have? That's right, you're at 50%. But if you're part of a larger investment property that has 200 units and 10 tenants move out, you only have a 5% vacancy. So by diversifying your portfolio and joining in with other investors who are dealing with large-scale properties, you're able to mitigate your risk much further than you ever thought possible, while maintaining a passive role that allows your weekend to be time for golf, mowing the lawn, taking the kids to activities, all of the kind of things that you actually had planned in your life. But what you need to do with that is you need to select experienced and reliable partners who've specialized in commercial real estate for a decade or more. And what you're going to be looking for is someone that's got track record, that's been involved in management, that has all facets of the deal covered. It's not something that you're looking for someone that is farming out to this firm and farming out to this firm. You're looking for someone that actually has the experience that helped them understand the deal from A to Z in-house. And that's going to prevent them from overestimating rent potentials, underestimating repairs, underestimating absorption rates, and the exit caps at which these projects are traded. These are all very, very important things when it comes to selecting a partner to work with. You know, a common new commercial investor may make such mistakes as looking at a property and in their excitement, they overpay for it and they underestimate the expenses. Now, the bank isn't going to care because they see what the property is worth through the appraisal and they see what's the estimates are from the investor. Those are not things that they are going to get in and work through if the investor miscalculates. Those are going to be borne by the investor. That is going to come back to you in the form of capital calls. What if they can't get the absorption? What if they can't get the target price? All of those things are going to affect you. And while they painted a beautiful picture in the PPM, the private placement memorandum, they're going to be coming up short, as we've seen over the last couple of years, that people have gotten into trouble because they have overestimated on the rent up side and underestimated on the expense side. And that is very deadly in the investment market. So there's a lot of properties that promise depreciation, cost segregation opportunities, and potential tax credits. But here's what you need to identify first of all. You need to identify your tax problem, and that initially begins with you. What is it that you're wanting to eliminate as far as the tax code goes in your world? Then once you've identified that, step 2 is to research and identify commercial investments that are going to offer you the similar tax benefits that you're looking for. They're going to provide you a deeper dive into how commercial real estate works in the office environment, multifamily, mini storage, all these different ones. And you're going to be able to find the tax benefits that are going to be able to be applied to you, not just the one size fits all that a lot of syndicators are selling at this point. So then once you've taken step 1 and step 2 and you've figured that out, you're going to want to find a seasoned operator that's in the commercial space who specializes in managing the types of investments that you want so that you can ensure that they align with your tax strategy and your investment goals. professionals. And then you're going to want to partner with these operators to handle the management and the operational aspects of the investment to reduce your hands-on involvement. See, this is going to lead you to step 5, which is what is the best step ever. When you've partnered with a seasoned operator, you're going to have your time freed up by working with them. You're going to focus back on your primary profession or explore further investment opportunities or just take a vacation. And you're going to use the profits and the time saved to reinvest and enhance your lifestyle. See, this is what it's really all about, because by partnering with more experienced professionals in a larger game, you're going to be able to work smarter and not harder by leveraging their expertise, their opportunities to bring you the specific tax benefits of commercial real estate that will outpace, hands down, single-family home investments, especially when you're discussing cost segregation and depreciation and how to specifically accelerate your tax savings. You're going to learn about the operational partners and their roles in managing those commercial properties and understand how they're going to be your hands-on day-to-day management that allows you to focus on broader strategies and decisions rather than the operational hassles. And now you're going to be able to learn more sophisticated financing structures that'll allow you use of leverage that you wouldn't normally be able to do. These will all mitigate your exposure and your risk, but the importance of due diligence, market research, and economic indicators that impact the commercial properties cannot be undersold. This is where you have to understand what your strategies are from a tax perspective. Because if you can lower your tax bill going into the deal by doing the deal, you're going to probably make more in the first year than the operator is promising in the first 3 of the deal. As you master the basics of commercial real estate, the next step is scaling your investments for long-term wealth. Scaling isn't just about expanding your property count. It's about strategically enhancing the quality of your investments, diversifying your portfolio to minimize the risks and maximize your returns. Partnerships and real estate syndications become your leverage here. These collaborations allow you to pool resources and expertise, giving you a seat at the table for larger, more ambitious projects. There's always reasons to diversify. Right now, interest rates, we just got a rate cut. Things are starting to look better for multifamily. In the meantime, office is coming back. Everybody's talking about being involved in back to work policies and all of that kind of stuff. So you need to have somebody that's got their eye on the different balls that are in the real estate world that allow you the ability to take their data, their due diligence, all of their hard work, and capsulize that for you so that you can digest it. Then you can become an intelligent investor and look at those businesses or real estate opportunities, look at their buying power, look at how those partnerships are coming together, and rely on their resources to give you the framework of what you're going to drill down into and make your final decisions. This is going to allow you to basically get cliff notes on hundreds of investments without having to go find the deal, do the due diligence, make all the assumptions, put together the bids, all of those kinds of things, and it's going to give you a massive amount of your time back. Let me just give you an example. If you're going to buy a fourplex, right now in our market, there are no real good deals on fourplexes, and everything that you're buying is 15 to 20 years old. You're going to have things start to break down, heating and air units are going to go out. You're going to have all of that. But what if you could be involved in brand new construction? What if you could be involved in brand new mini storage? All of these things are available at a higher level when you're working with a syndicator that's going to help you generate ongoing passive income and capital appreciation while maximizing the tax strategy that you lined out for yourself as the most important thing in this. So if you want a detailed explanation of what the Intelligent Investor Framework is that I've created, there's an hour-long video linked below where I explain exactly what the strategy is, how it works, and what it looks like in real-life examples.